Since the pandemic first emerged in early 2020, massive monetary easing has helped the world economy recover from the shock of the COVID-19 virus. By slashing interest rates and undertaking vast quantitative easing, the Federal Reserve and other central banks have staved off a global depression in 2020. This has enabled equities to hit all-time highs in 2021. But central banks are now starting to gradually exit their ultra-loose monetary policies as vaccinations allow lockdowns to be lifted. For example, the Bank of England and the Bank of Canada have already begun tapering quantitative easing. Next year, the two central banks and the Reserve Bank of New Zealand are likely to start increasing interest rates. In contrast, the Fed still remains some distance behind here. It views increases in inflation as the US economy reopens being only temporary this year. Thus, the central bank continues to be dovish. Its Fed funds rate remains very low at 0 to 0.25%, and the Fed's still buying $120 billion a month of bonds to support the US economy's recovery. But at its June meeting, the Fed surprised financial markets by tweaking its dovish stance. Policymakers began discussing when to taper quantitative easing. In addition, the Fed's new forecasts show the central bank may start lifting its Fed funds rate in 2023 now. The hawkish tweaks are likely to be the start of the Fed gradually exiting its dovish stance over the next few years. Its moves have thus hurt reflation trades by raising fears that growth would be undercut by tighter Fed policy in future. Risk assets have become more volatile. The US yield curve has flattened. Inflation expectations have fallen. Gold prices have weakened. The dollar has rallied. We think the Fed's leadership, however, is more dovish than the central bank's new forecasts imply. We therefore expect tapering will only begin in 2022. Thus, risk assets are likely to stay supported in 2021. But the Fed's tweaks are affecting sentiment now. Its changes are thus likely to increase volatility for the rest of 2021, even if the Fed doesn't begin tapering until early 2022. For more information, please read the latest edition of our monthly investment guide titled Managing the Transition.